Most people jump right into the stock market without actually preparing properly their financial statements and their financials to be ready for stock market investing. All right, so how do you invest in stocks? In this video, we're going to talk a little bit about the stock market, how to invest in stocks, and some ideas and thoughts that I would share with you, especially if you're brand new to this. If you've been doing stocks for a while and felt like maybe you've need a little bit of a refresher, this is going to be a great video for you. Watch to the end where I share with you some of the things, the platforms that I use to actually invest in the stock market. My name is Cluff, and I'm a former financial advisor turned financial educator and coach. I absolutely love helping people manage, protect, and grow their money. And in this video, we're going to talk about the stock market. There's three major ways to build wealth over time. The first one is the stock market. The second one is real estate. And the third is building a business. The stock market is actually kind of the foundational way to do and build wealth, and so I highly recommend you learn how the stock market works. Now, here's the thing about the stock market, is that a stock is actually an ownership position in a company. So when a company wants to raise money for whatever reason, their capital, research and development, just the myriad of reasons that a business wants to raise money, they will do it one of two ways. They'll do it with stock options, or they'll do it with bonds. Now, stock options are where they actually sell ownership shares in the company. So let's say that this isn't exactly the right number, but let's say you were to start a company and you had 1,000 shares and you wanted to sell each one of them for $10 so that you could raise $10,000. So 1,000 shares times $10. Well, each person who buys those shares is going to be able to have an ownership position in your company. Now, if you buy a certain percentage of the total shares available to the company, you actually have a say in how that company is run. So you got to be careful. If you're going to be a corporation or you're going to be a company that's going to offer shares, you just need to be careful how many shares you allow each person to buy, because you don't want somebody taking over your company and being able to make decisions that you don't like. But the other part of it is the bond market. Bonds are actually more of a debt instrument. So if you don't want to have somebody have an ownership position, they just want to have them basically lend you the money, you can sell them a bond. And that bond basically means that you have to pay them back a percentage, kind of like they're loaning you money and you pay them interest and you pay them back in the form of, usually in the form of interest coming back to you. Now, if somebody can hold a bond forever, they don't ever have to pay that back. And so it could grow in value as the company grows as well. So there's just different ways to invest in the stock market. But we're going to focus more effectively on the stocks. I wanted to share with you, though, what a stock really is, though, so that you kind of got an idea. When you go to buy stocks, you're actually buying a position in that company as an owner. So you're actually an owner. Well, the idea here is, though, when you're investing in the stock market, you want to pick stocks that you're comfortable with first. If you're brand new to the stock market, you've never bought stocks before, I highly recommend you go with companies that you're familiar with. Don't buy some random stock option or stock position that your brother-in-law called you up and said, "Hey, I got the hottest stock tip ever. You better, get this one or else you're gonna, miss out." So don't worry about any of that stuff. The stock market, the deal of the decade comes around about every day, every week in the stock market. So don't worry about that. I would start with getting to know the stock market with companies that you're familiar with, companies that you already buy things from in your day-to-day life. Some of the big names, Microsoft, Apple, Verizon, Toyota, Honda, just companies that are big and that have been around for a long time that you already know and are comfortable with. You know they're going to do well, or at least they're going to maintain. They're not going to go out of business tomorrow. The last thing you want to do is get into a stock that's going to be great today and gone tomorrow. So that's kind of the fear about the stock market, is people get into these speculative investments, and that's where they run into problems. So stay away from those speculative investments. Start with things that you know. Start with companies that you know, companies that you're familiar with. The next thing I would say is to follow Warren Buffett's great advice. He was asked, what would you tell your family if they were to start investing in the stock market? He said, I'd tell them to pick a great index fund and just let it grow. And that's a huge wisdom. That's a huge amount of wisdom, because picking individual stocks rarely does very well for most folks unless you have a particular affinity towards a stock. For example, I own some Ford, I own some Toyota, I own some Honda, I own Verizon. Those are just companies that I use anyways in my day-to-day life. So I own shares of those companies. There's a couple others that I've chosen over the years, but I'll be honest with you, I have chosen many that were delisted, that went off, that were all speculative, and I've lost money. So take it from somebody who not only was an advisor, but also who has personal experience do not get involved in speculative investments. Now, if you want to know more about stock markets, because this is just a brief overview, if you want to know about investing and building wealth over time, you're going to want to check out my school community. I'm building a school community for people who want to learn, become more financially literate, financially confident, get clarity on their money, and have accountability towards achieving their financial goals and dreams. So check out my website at pariscluff.com/school. That's SKOOL. pariscluff.com/school, and join my community. It's free to join, and then after that there's opportunities for more. Let's jump back into how to invest in the stock market. So there's different ways to invest in the stock market. You can pick an index fund, which is great. That's kind of a set it and forget it. You can actually invest in individual stocks, and I would recommend starting with companies that you're familiar with. If you're young, I would pick stocks that are growth stocks. What that means is they're going to grow over time. Is that, if you're 20s or 30s, and by the time you're 40, 50, or 60, those stocks will increase in value over that 20, 30-year time horizon. Now, if you're a little older and you're 50s or 60s and looking towards retirement, you might move some of those stocks into more dividend-paying stocks. Now, what is a dividend-paying stock? A dividend-paying stock is, as I shared earlier, a stock is part ownership in a company. So when a company has profits, they will usually, they pay their staff, they pay the executive board, they pay the board of directors, the presidents, all that, and then the leftover profits that they have, they will distribute that to the rest of the owners as shareholders. So it's a shareholder dividend. It's a percentage. Sometimes, for example, if you own 100 shares, or if you own a share of a stock that's worth $100, and they declare a 5% dividend, you're going to get $5. And it's once a year usually. Sometimes it's paid out, though, quarterly, and some companies pay it monthly. So it just depends on what you want to do. It's an annual dividend that's paid out quarterly or monthly, depending on the company and depending on the investment that you get involved in. So if you're a little older and you're really looking forward to some income, the dividends are a great way to kind of have that income. As the owner of the company, you're actually earning an income off of the dividends. Now, there are some strategies where you can, if you're a little bit younger and you want to earn dividends and growth, there are several companies that do both of those things. That's something I highly recommend. I have a playlist actually on dividends. I'll link it up here. At the end of the day, though, that's how you pick a stock or how you invest in the stock market in terms of picking the right stock or what's the right investment to choose. Now, if you have a 401k or you're looking to fund your 401k and you want to pick the right stocks there, sometimes a target date fund is okay. I don't like them very much because the fees are typically pretty high. So I would definitely also just choose, even in your 401k, just pick like an index fund, especially if you have a longer time horizon than 10 years. If your time horizon to retirement is less than 5 years, you want to stay in very balanced or even preservative funds. So what that means is you don't want to be in growth funds. You want to be in stuff that's kind of balanced and really conservative, so that you want to, the first 5 years before you retire and the first 5 years of retirement are the kind of the most important years to maintain and make sure you're preserving your capital. You don't want to really be in a lot of speculative or growth funds during those periods of time. But if you've got 10, 20, 30 years to go before you retire, throw that stuff into the growth funds and really let that thing go. Now, what are some of the platforms that you should use? Now, a lot of people today will use, Fidelity, Charles Schwab. Some of the big banks actually have a lot of brokerage firms that you could walk in there and you can say, hey, I want to start investing in the stock market. Any financial advisor could help you, an actual financial advisor that will help you find the stocks that you're looking for. Though there is a lot of newer apps that are do-it-yourself. So if you're a do-it-yourselfer, I highly recommend apps like Robinhood, Webull, M1 Finance. I have a link below, so click the link below if you want to get in on some of those. Some of those actually pay you for accepting my referral. So, M1 Finance for sure, if you click on the link for M1 Finance and you open up an account there, you'll actually get, they actually pay you because you used my link. So that's actually a cool incentive for you to use that link. But there's Robinhood, Webull, there's probably a bunch of others that I don't know about and aren't discussing here. So if you actually have an app that you're using to invest that's not Robinhood, Webull, or M1 Finance, put it below. I'd love to know which app you're using and see if it's any good, and I'll check it out. Also, I would say that if you're not somebody who's a do-it-yourselfer, you're kind of like, look, I just want to give somebody my money. I want to have them just give me advice. I want to have them just tell me what to do and where to put it. You can reach out to me at pariscluff.com, and I will share with you some strategies to get prepared and get ready for investing in the stock market, because that's one of the things that most people neglect to do. Most people jump right into the stock market without actually preparing properly their financial statements and their financials to be ready for stock market investing. I think that's very important. I will help you get ready, and then once you're actually ready, if you find out that you still want to have help from an actual financial advisor, there's a lot of great companies out there, but I have some friends that are still in that industry that I would refer you to that are really good at what they do, and they're honest, and they will do the right thing they'll do the right thing for you. If you missed the last video that I produced about gold backs, you're going to want to watch that here. Until the next video, make sure that you're taking time every day to turn your income into wealth and build a massive bank account. Take care.